Welcome back to Investing Talk Podcast. Today, we're digging into a really interesting, maybe controversial name in the battery tech world, Quantumscape Corp. And the big question, the one you're probably asking, is simple. Is now actually a good time to buy the stock? It's certainly been volatile. Before we dive in, though, just a quick reminder, if you find this useful, please hit subscribe, give us a like, maybe drop a comment below.
Yeah, and let us know if there's another company you want us to tackle next. Just put the name in the comments. We'll definitely look into it. Okay, so our job today is to try and make sense of Quantumscape. We've got a whole pile of material here, financials, tech reports, market analysis. And honestly, what jumps out is this massive, almost fundamental conflict. You've got the balance sheet today versus the promise of tomorrow's tech. It's fascinating. Let's hit that conflict head on. Starting with, well, the tough part, the financials. If you just look at the numbers right now, there are some serious red flags. I mean, the company is pre-revenue.
Right. No significant recurring income streams yet.
Yeah.
And the losses, they're huge. Net income for the last 12 months, negative $449.61 million. That's a lot of cash burn.
A very aggressive cash burn. And that's really why the analyst consensus is currently a sell.
Right, with a price target around $5.88.
Exactly, which is, what, 56, 57% below where it's been trading recently?
Yep.
I mean, if this was, say, a traditional car company, you'd be looking at a collapse.
Okay.
But, and this is the crucial but, you have to see this differently. This isn't Ford or GM. These losses, this burn rate, it's kind of the entry fee for developing what could be a generational technology shift.
The solid-state lithium metal battery.
Precisely. This isn't just tweaking current batteries. It's potentially transformative for EVs. Think higher energy density, faster charging, maybe safer too. So those huge losses, that's the R&D bill. It's the price of trying to pioneer something really big, you know.
So the argument is, basically ignore the profit and loss statement for now, because the potential future win is so big, it outweighs the current bleeding.
In a nutshell, yes. That's the bet. And while the cash flow is negative, because they're constantly spending on R&D and building up production capabilities,
Yeah.
the balance sheet itself isn't as precarious as you might think at first glance.
How so?
Well, they've got substantial cash reserves, and they're not loaded up with traditional debt.
Yeah.
They've been funding this mostly through equity financing.
Issuing more stock.
Right. Which, has its downside. It's dilutive, meaning each existing share represents a smaller piece of the company. But it gives them flexibility, critical flexibility when you're still in this pre-production heavy investment phase. Their real asset isn't profit today, it's that technology lead.
Okay, that makes sense then. It explains how a stock with, frankly, terrible current fundamentals can still get so much attention, such a valuation, and all that volatility. Investors aren't buying the 2025 income statement. They're betting on the tech actually working and scaling up.
Exactly. It's a forward-looking bet.
So let's talk about that tech. What's their edge? What's the secret sauce compared to all the other companies trying to crack solid state? Our research kept pointing to their patents, their know-how around these ceramic separators.
That ceramic separator is, well, it's kind of the key enabler here. Your standard lithium-ion battery. It uses a liquid electrolyte, which can be flammable. Solid state aims to replace that liquid with a solid material, often a ceramic.
Right.
And if you get that solid separator right, it lets you use a pure lithium metal anode. That's where the big gains in energy density come from. And it potentially solves the fire risk issue, too. Quantumscape's claim is that their specific intellectual property around that ceramic material gives them a durable lead.
Okay, that's the science part. But the market's always been worried, haven't they? Worried about whether they could actually build this stuff at scale. The lab results looked good, but manufacturing is a different beast.
That was the execution risk. Absolutely. Could they translate lab success into a real manufacturable product?
Has that picture changed recently?
Significantly, I'd say. And that's why you saw that recent excitement in the stock. These strategic deals they announced are really important.
With Corning and Murata.
Yes. Those aren't just small validation deals. Corning is a giant in materials science and glass. Murata in electronic components. Partnering with them directly tackles those manufacturing scale-up and supply chain worries. It reduces that skepticism that was really holding the stock back.
Ah, so those partnerships are like tangible proof points, showing they can potentially move this from the lab bench to a factory floor. That's what boosted sentiment.
I think so, yes. And operationally, you're seeing progress too. They shipped their first B1 samples of the QSE-5 cells back in September.
B1 samples.
Yeah.
What does that mean practically?
It's an early version, but it's a key step. It gets the product into the hands of their partner, VW Group, specifically for testing in that Ducati electric motorcycle program.
So real-world testing by a major potential customer.
Exactly. You need that customer feedback loop to move towards automotive qualification. It's a necessary step.
And they're building the capacity to make more of these.
Seems so. The notes mention they've installed this highly automated pilot production line, the Eagle line, in San Jose.
Okay.
The idea there is to scale up cell production and figure out the processes needed for, actual automotive volumes later on.
Right. Let's pivot to the stock price itself. Because, wow, this thing does not trade like your average company. It's a real momentum vehicle. Didn't it jump like almost 20% just on that Corning partnership news?
It did a huge surge, and that tells you just how sensitive the stock is to any news that suggests they're de-risking the plan. If you look at the last 3 months or so, it's been bouncing between roughly $13 and $19.
Okay.
And right now, it's trading above its 50-day moving average, which technically suggests some near-term bullish momentum after all that positive news.
But there's always a but with this stock.
There is. You absolutely have to be aware of the volatility. The beta on this stock is 4.86.
Wow. Explain beta quickly for folks who don't track it daily.
Sure. Beta measures how much a stock moves relative to the overall market, like the S&P 500. A beta of 1 means it moves in line with the market. A beta of 4.86 means, well, theoretically, if the market moves 1%, this stock might move almost 5%, up or down.
So huge swings, amplified moves.
Extremely amplified, especially when market sentiment shifts periods of risk-on buying or risk-off selling. This stock will likely exaggerate those moves significantly.
And looking at the trading patterns, these big moves seem driven more by short-term traders jumping on news rather than big institutions slowly building positions. Is that fair?
The volume spikes around announcements certainly suggest that. It looks very event-driven. Retail interest seems high. But here's something else important we found, kind of a counterpoint to the recent rally.
Oh.
Despite the stock's recovery and all the positive partnership news, there were actually some significant insider sales back in September. Senior management, directors, including Director Jeffrey Straubel.
That's interesting timing. Selling shares right after positive news and a price jump.
It is.
How should you interpret that? Is it just execs needing cash, or does it signal maybe they thought the rally got a bit ahead of itself?
It's hard to say definitively right. These sales are often pre-planned or for personal reasons. But the timing,
Yeah.
it warrants attention. It certainly underscores that even for insiders, the near-term path might still look pretty risky. It adds a layer of caution.
Which leads us nicely into the upcoming events. Because the volatility we just talked about, it gets magnified around specific dates or potential announcements. These are the binary catalysts.
Yeah, where you could see really rapid, potentially large price swings, depending on the outcome.
We just had one, didn't we? The Q3 earnings report in October.
They did. And the focus wasn't really on the loss figure itself. Everyone expects losses. It was all about management's commentary. What did they say about pilot production progress? What's the updated timeline for potential commercialization in 2026? That's what investors were listening for.
And the market reaction was pretty sharp, wasn't it? Didn't the stock drop like 12% around the announcement?
It did. Which just proves how hypersensitive the price is to the tone and confidence level coming from management, even if the underlying work is progressing.
Okay, so what's next on the calendar?
The next sort of hard date we see is November 15th. That's when they're scheduled to deliver more of those B1 production samples.
More validation for customers.
Exactly. It's another key step to keep VW and any other potential partners engaged and moving towards that automotive qualification goal. Positive feedback on those samples would be a big confidence booster for the market.
And then looking further out into December.
December often brings market flow events. Things like ETFs rebalancing their holdings funds, might have to buy or sell Quantumscape depending on index rules. Plus, you get the institutional 13F filings released. That's when big money managers have to disclose their holdings from the previous quarter.
So you see if major funds started buying in or maybe sold out.
Right. And those flows and disclosures can definitely move the needle on volume and volatility.
And alongside these scheduled events, there's always the rumor mill, right? Especially with a stock like this.
Oh, absolutely. Speculation runs rampant. And honestly, sometimes the biggest short-term moves are driven by unconfirmed chatter. Right now, a couple of big ones seem to be floating around. One is about a potential expansion of partnerships, a deal with another major automaker beyond VW.
That would be huge.
Massive. And the other big rumor revolves around some kind of upcoming demonstration of breakthrough fast charging capabilities for their QSE5 cell.
Why is fast charging such a big deal psychologically?
Because it's one of the biggest hurdles for EV adoption, right? range anxiety, and charge times. If Quantumscape can show their solid-state cell charges significantly faster than current batteries without hurting its lifespan, that directly addresses a major consumer pain point.
That would be a game changer.
It really would. It would strongly validate the whole investment thesis. And then, there's also the background noise about potential M&A interest or maybe a big government grant or loan to help them build out manufacturing here in the U.S.
Which would ease the pressure for more equity financing.
Exactly. Less dilution risk. So lots of potential catalysts, both confirmed and speculative.
Okay, let's try and pull all these threads together. You've got this amazing, potentially revolutionary tech that seems to be getting de-risked through partnerships, colliding with really challenging current financials, huge volatility, and insider selling. So back to the original question. For you, the listener, is it a good time to buy?
Well, the analysis we looked at, synthesized from all these sources, actually comes down fairly decisively if you believe in the long-term vision. Despite the risks, the overall rating was actually bullish at 8.0 out of 10.
Wow, an 8 out of 10. That seems incredibly high, especially when, as you said, the analyst consensus is sell and the price target is way lower. Is the market just being overly optimistic, or is there a rational case for that bullishness?
The rationale behind that 8.0 rating is focused on asymmetric upside potential, meaning the potential reward, if they succeed, is perceived to be much, much larger than the current risk of loss. The partnerships are seen as validating their execution ability, which was the biggest doubt. That validation, combined with the upcoming catalysts, creates situations where the stock could potentially move significantly higher on positive news. The upside is seen as disproportionately large compared to the downside from current levels, even with the risks.
Okay, so it's a high-risk, potentially very high-reward calculation.
Exactly. But you have to understand what kind of investor you are here. Short-term. Yeah, it's attractive if you're a momentum trader.
Yeah.
Someone who plays catalysts and can stomach, 20%, 30%, even 50% swings based on news or rumors.
Okay.
Long term. This is only suitable for investors with a very high tolerance for risk. The dream of huge multi-year returns depends entirely on them hitting those big milestones, especially generating actual consistent revenue. That hasn't happened yet.
Which brings us to the final essential warning, really. This is undeniably a highly speculative investment right now. The technology is exciting, the momentum is there, but the path to reliable profits is still long and absolutely unproven. You have to watch the execution, watch the cash burn, watch the competition very, very closely. Success is far from guaranteed.
It really isn't. And maybe a final thought to leave you with, stepping back and looking at the big picture. The global push towards electrification, all the government targets, that creates a massive tailwind. The demand for better batteries will be there. So the question isn't really if this kind of solid-state technology will be transformative. Almost certainly will be eventually. The real question is, can Quantumscape maintain its lead and scale up before competitors either catch up or maybe even leapfrog them with a different, perhaps better or cheaper approach? That race against time, against the competition, that's probably what will ultimately decide the long-term fate of this stock.
A race against being leapfrogged. That's a powerful way to frame it. Definitely something to think about. Thank you. That was a great breakdown of a complex situation. We really appreciate you joining us today. And thanks to all of you for listening. We'll be back soon with our next analysis.